Why would a financial advisor keep 39 cents in her savings account? Stay with me. So, we're going to talk about what to do to build savings quick. Tell you my own personal story. I have multiple savings accounts, and I have one savings account that is directly connected to one of my checking accounts, and I have all of 39 cents in that account as of this morning. Now, I have more in savings, but I just choose not to keep much savings in that checking account. Reason being, it's too easy to spend. Now, 39 cents is a bit ridiculous. I probably should have a little bit more in that account. But basically, I keep my savings in other places that are more difficult to access and are in a high yield situation where they are earning interest. So that brings me to my first point. Have an account that is separate and not necessarily easily accessible that you can save money in, preferably a high yield savings account. I have a savings account at my bank. I have a savings account at Schwab. I have a savings account at American Express. I have multiple savings accounts. And essentially, I do that for the purpose of not having easy accessibility and also earning interest on high yields. So definitely check what you're doing in terms of savings. You don't want to have 10 different savings accounts. I'm probably pushing it with having 3 different savings accounts. I probably could do with 1 or 2 less. But high yield savings is important for building savings very fast. And if you do not have access to a high yield savings account, you may want to look into opening one to keep it separate from your checking and your daily expenses. Next, I bet you don't know this, but you can actually automate your savings directly from your paycheck. So I work for an organization and I am paid every 2 weeks, and I can go into the system and designate which account to send my paycheck to. Most people send 100% of their paychecks to one single account, but you can carve out a certain amount, whether it's a dollar amount or a percentage, that will go to a second or even third account. So if the money from your paycheck never hits your checking account, you never see it, you never have an opportunity to spend it. So if you want to build savings fast, figure out how much you're willing to commit to this goal. It could be as little as $50, it could be as much as $500 or $5,000, and see if you can go into the payment system for your current employer and designate that specific amount or a percentage of your paycheck to go directly to that high yield savings account every 2 weeks when you get paid. Okay, this is an excellent idea that one of my clients had, and he did a 1 month spending freeze, meaning he committed to that 1 month of time of not dining out, not purchasing anything online, not buying any new subscriptions, and it saved him a few $100s. He was able to put that few $100s into his savings account. Now, it may not be something that he could do forever, but he committed to doing it for a limited period of time. And something that he said from that experience surprised me. He said a lot of times the things that he thought he wanted from Amazon, or a lot of the things that he wanted to get, after 30 days, he had forgotten about it or he really didn't want anymore. So putting a time frame that you're going to give yourself a cooling off period before you go out and purchase things may help you build your savings, but also giving yourself a 30-day spend freeze and using that money to kickstart your savings could be a good idea. Temporary side hustles and part-time jobs. So if you have evenings and weekends available, if you can take a temporary side hustle or a part-time job just until you have 6 months living expenses in savings, that can be a way to really turbocharge building your savings. Now, after you have the 6 months living expenses and savings, you can decide whether you want to continue with that side hustle or whether you want to conclude that. But sometimes people decide that it's fun or it's interesting and it brings in some extra money, and it's okay to continue with the side hustle. But taking on some temporary work for extra cash can be a fun way of building a different skill set, but also turbocharging your savings. Two of the biggest areas of people budget is often their transportation and their housing. Telling you, cars have been taking people under, especially since the end of COVID, where car prices have skyrocketed. I've seen people with anywhere from $700, $800, $900 to over $1,000 a month that they are spending on a car note for a pretty standard car. Now, I know cars are still relatively expensive and even used cars are relatively expensive, but can you take a look at your transportation expenses and make some adjustments? It may be as simple as calling your insurance company and seeing if you have the best deal around. I remember my insurance just went up. I called my insurance company and it turns out they had the wrong mileage on my car. And once I was able to verify the correct mileage, my insurance rates fell considerably. Small things, simple things like that, like checking the insurance rate, making sure it's up to date and that you have the best deal, is low hanging fruit. But it may mean taking a look at your car. If it's an older car and it's paid off, hold on to that car and it's reliable, hang on to that car. If it's not a car that's paid off, are your car payments reasonable? Are you feeling completely squeezed by your car payments? If you're earning, a few $1,000s a month, your car payment should not be a four-figure amount. If you are paying too much for that car, at least investigating the matter. Are you right side up on the car payment? Meaning you can sell it and pay off the loan, or you could sell it and you'll leave with some extra money, or are you upside down? If the car payment is too large and you are right side up on that car, it may make sense to get a cheaper car. I've really seen people doing themselves and doing their financial future over a car, and a car really isn't all that important. Maybe you can drive a cheaper car for a couple of years until you can get yourself together, get a savings account, get investments started, save for retirement, and then get the car that you really want. So that's transportation. Housing is housing. I know it's gotten considerably more expensive over the past 5 years, but is there some way that you can budget your housing expenses? If you own a house, are you willing to take on a roommate? I have a client who has agreed to build an ADU, a dwelling unit in his backyard so he can take on a tenant. That's very specific to location and to permitting, but it's a wonderful idea for him to be able to take on a tenant but not necessarily share his personal space in the house. Can you move to a smaller apartment? I lived in a studio apartment for about 4 years, and I really didn't know that much of a difference between studios and one bedroom, especially if it's a well laid out studio. Sometimes you can save several $100s by just agreeing to live in a studio for a period of time. Can you move further out? I live in San Francisco. I absolutely love it, but San Francisco is incredibly expensive. People do make the choice to live outside San Francisco or even outside the Bay Area and commute in. Theoretically, I could do that because I go to the office maybe twice, sometimes 3 times a week. But that would be a really amazing way for someone to save money. So taking a look at your housing, taking a look at your transportation, seeing if there's any way to trim the budget on that. Next, bonuses. If you are lucky enough to get bonuses, whether they're annual or quarterly or performance-based or team-based, that money should be dedicated towards savings if you don't have at least 6 months of savings. That's an easy win right there. Extra paychecks. Some people have the good fortune of being on a 26 pay cycle for the year. That means 2 months out of the year you will get 3 paychecks. In those months where you receive 3 paychecks, that third paycheck goes directly into savings to build up your 6 months of living expenses. Should you save or should you pay off debt? The answer is both. If you don't have 6 months living expenses and savings right now, the priority is building up your savings. So if you receive an unexpected windfall of money, take 3/4 of that and put it in savings, and take 1/4 of that and put it to debt. But if you have money in savings or you're close to getting to 6 months and you really want to take that debt on head on first, you may want to divide that windfall in half and put half towards savings and half towards debt. I want you to know that building up 6 months of living expenses and savings can take years for some people. A lot of people want to do it fast given the totality of everything that is going on in the US right now and the darkening financial outlook pointing towards recession. It can be done, but it depends on how many changes you're willing to make in your daily life and how many adjustments you're willing to make to your budgets to make it happen. I've definitely dealt with clients as a financial advisor who've dealt with long-term unemployment, and the people who had 6 months or even 8 months of living expenses and savings were able to fare much better versus the people who didn't have savings or the people who only had $1,000 or 1 or 2 months of savings. Take these tips, start building your savings, and if you found this information useful, please like, share, and subscribe.